The podcast opens with an exploration of why gold remains relevant despite the technological progress of modern times. Gold's physical properties, durability, divisibility, fungibility, recognizability, scarcity, and portability make it uniquely suited to serve as a medium of exchange and store of value across civilizations. Unlike primitive forms of money such as beaver pelts or tobacco, gold has intrinsic qualities that have made it a near universal medium of exchange across continents and centuries. Chris Olson highlights that societies have naturally gravitated toward gold because it meets all essential criteria necessary for money. This timeless suitability ties into human civilization's continuity, as gold's role transcends mere commodity status to becoming a symbolic and metaphysical representation of wealth. Both ancient civilizations, from the Egyptians to the Mayans, and modern investors recognize gold's unique role as a reliable form of wealth preservation. A critical subject discussed is the detrimental impact of fiat money and inflation on society. Chris explains how the government's ability to create artificial credit and inflate currency concentrates purchasing power with those closest to the issuance of new money, effectively creating a hidden transfer of wealth through inflation. This mechanism distorts market signals, causes price instability, and redistributes purchasing power unfairly. This inflationary system also centralizes economic and political power, allowing officials and institutions control over money in a way that is ultimately divorced from the real wealth or productivity of the economy. The discussion traces these effects to events like the suspension of the gold standard in 1971, after which inflation began eroding the purchasing power of everyday citizens and contributing to socioeconomic decline and public distrust. The podcast delves into the history of the gold standard, which anchored currency values to a fixed quantity of gold. Prior to 1971, the U.S. dollar operated as a partially gold-backed currency, providing a stable benchmark for monetary value and inflation. However, increasing government debt, overseas redemptions of gold reserves, and economic pressures forced the U.S. to sever this link, resulting in a fiat currency system that allowed unrestricted printing of money. Chris Olson describes this transition as a default by the government, likening it to a bankruptcy and subsequent revaluation of debts. This move unleashed sustained inflation and financial manipulation that have adversely affected the purchasing power of the average American. The abandonment of a gold-backed currency, he argues, has had profound negative consequences for society, including the loss of trust in financial institutions and accelerating economic inequality. The podcast challenges common economic views about gold, especially its performance relative to traditional equity markets. Despite widespread skepticism and dismissal by mainstream economists and investors, data shows that gold has outperformed the S&P 500 over the last 25 years, rising roughly 1,000% compared to the S&P's less than 400% increase, including dividends. This surprising revelation underscores gold's role not just as a hedge against inflation, but as a superior long-term store of value. Chris and his interlocutor argue that government policies have worked hard to suppress gold prices to maintain dollar dominance, protecting the fiat currency system at the expense of gold's natural value and investors' returns. This performance divergence calls into question conventional wisdom about asset allocation and the wisdom of sidelining precious metals in portfolios. A significant geopolitical theme addressed is the ongoing dollarization reversal, where countries seek alternatives to the U.S. dollar as the global reserve currency. The imposition of sanctions on Russia after the Ukraine invasion accelerated this trend, exposing the dollar's vulnerability as a tool of foreign policy and economic coercion. Countries, particularly those in BRICS, are actively searching for neutral reserve assets less susceptible to political manipulation. Gold emerges as the only viable alternative reserve asset due to its intrinsic, tangible nature and universal recognition. While cryptocurrencies like Bitcoin are discussed as theoretical options, they face critical limitations related to energy dependence, technical risks, and potential vulnerabilities to electromagnetic pulse (EMP) attacks. This geopolitical shift lends renewed importance to gold as both a monetary instrument and a hedge against geopolitical uncertainty. Chris Olson provides an insider's explanation of how the gold market functions globally. The spot price of gold is determined on major commodity exchanges such as COMEX in New York, the London Bullion Market Association, and the Shanghai Gold Exchange. These exchanges facilitate liquidity through futures contracts and standardized bars, with mining companies and refiners as primary suppliers. From these bulk sources, refineries and mints produce smaller denominations of coins and bars for retail investors. Transactions include wholesale trades, retail sales, and secondary market dealings, where bars may be melted and recast to accommodate demand or absorb selling pressure. The pricing difference between spot and retail is primarily due to logistical friction, processing costs, and overhead, which explains the premiums charged on physical gold products versus the market price. A core issue dissected is the fraudulent practices prevalent in the gold sale industry, especially targeting retail investors and retirement accounts. Chris reveals that many companies charge exorbitant markups, sometimes up to 100% above spot price, often by selling commemorative or special edition coins that have no intrinsic value beyond their gold content. This misleads consumers, many of whom are older and less financially sophisticated. These deceptive tactics often go unchecked because the companies rely on celebrity endorsements and a lack of transparent pricing on their websites. Customers believe they are purchasing gold at or near market rates, but end up losing significant value when attempting to liquidate. The podcast condemns these scams and advocates for a transparent, fair retail gold business model where pricing and markups are clearly disclosed, restoring integrity to the market. The podcast highlights gold's unique attribute as private money, allowing individuals to own and transact value without surveillance or third-party control. Unlike fiat currencies or digital payments monitored by governments or corporations, physical gold ownership preserves personal sovereignty and freedom, a point emphasized passionately by Chris. He explains that gold ownership and physical possession can be kept private with ease, and legally, individuals have the right to protect their wealth without undue government interference. This privacy faces opposition in modern regulatory regimes that conflate legitimate ownership with suspicion. Maintaining privacy in financial matters is portrayed as foundational to liberty and autonomy, making physical gold a vital asset in resisting undue centralized power. Addressing practical concerns, Chris explains how physical gold is stored, transported, and converted back into cash. Due to gold's high value density, large sums can be stored in small, easily concealed packages. Risks such as theft or fire are mentioned, though gold's durability means even melting in a fire results in recoverable value with minor loss. For liquidation, owners can sell back to dealers, including the original seller or local coin shops, often receiving competitive prices close to spot. Transactions involving gold eagles, a popular bullion coin, are especially liquid and exempt from some reporting requirements, allowing relatively private cash sales. These factors combine to make gold a versatile and manageable asset for long-term storage and liquidity. Silver is discussed in parallel to gold, with emphasis on its historic valuation relative to gold, typically between 12.1 and 15:1. Presently, the ratio sits near 90:1, a considerable divergence attributed to industrial demand changes, supply dynamics, and market controls. Silver's industrial role contrasts with gold's monetary role, and its price appears artificially suppressed by certain financial practices, including large-scale short selling by bullion banks. Chris expresses belief that silver is undervalued and that market manipulation or structural dislocation in pricing mechanisms explains its deep discount relative to gold and historical norms. The complexity of silver's use as both an industrial and monetary metal adds nuance to its valuation, underscoring the differences between these related precious metals in both market dynamics and investment potential. The discussion covers how the U.S. government and Federal Reserve value their gold holdings far below current market prices, reportedly around $42 per ounce compared to the market price of at times over $2,000. This accounting choice allows the Fed to avoid marking to market and obscures the true value of gold on their balance sheets. Chris explains that if the Fed revalued its gold reserves to market prices, it would dramatically affect the balance sheet and currency valuation, potentially driving gold prices to well above $20,000 per ounce. This revaluation could trigger profound economic shifts, including restoration of gold as a meaningful standard for currency valuation and addressing long-term systemic imbalances. The Fed's current low valuation is viewed as a tool to maintain fiat system stability at the expense of transparency and truth. The podcast culminates in the announcement of a new enterprise created to restore fairness and transparency in gold sales. Faced with pervasive industry scams and dishonest marketing tactics, the hosts partnered with Chris Olson, whose family's decades-long gold wholesale business emphasizes integrity. The new retail company, Battalion Metals, aims to provide everyday investors with clearly disclosed pricing, low markups, and easy access to physical gold. This venture is driven not primarily by profit, but by a desire to empower consumers, help them protect wealth honestly, and undercut predatory practices common in the market. The company supports full transparency, easy price checking versus spot prices, and commitment to customer education. It represents a response to an industry problem, promoting the idea that gold investment should be straightforward, fair, and trustworthy.